Great. Let's look at April. As you can see, remember this was the trade on the 28th of March, lying over here, where we had entered on the high of this candle. And as you can see, it entered us on this candle here. On this close, we moved our stop to the break-even point. The close of this candle, we moved our stop to the 161, and then we left it. We hit our target over here. Our next entry was here, right on this candle here, which was on the 16th of April. Right, where's my Fibonacci's? Let's just get hold of the Fibonacci's there, and let's just go and draw the Fibonacci's there. Righto. Now, as you can see, this candle here did not enter us, neither did this one. This candle over here entered us into the trade. We had a close above the 161, so immediately we bought our stop to the break even. This candle here came and stopped us out at break even, a zero loss trade. We did not have, because this candle over here, how was I put it to you? We only moved the stop in afterwards, right? After that candle closed. And this, when this signal was generated, we were still in this trade here, so I didn't enter it. And as you can see, the rest of April there were no extra signals on the FTSE. Let's go and look at the SPX. Here we are. As we would, let me just put an extra line over here. And this was the trade that we took, the last trade that we took on the 1st. Right, oh, sorry, this is a trade that we took on the 1st. The signal was generated on the 1st. We were not out of this trade. We were actually triggered into this trade over here. We were triggered into the trade here. So the signal that was generated here, we would not have taken because we have entered into this trade over here. And now this trade started on the 1st of April. Let's just go and see, where are we? Right, this trade over here, it just managed to take us out of the trade, and that was on the 23rd of April. The next signal that was generated was over here, which is on the 26th of April. Right, let's go through to there. Let's go put in our Fibonacci's over there on the 26th of April. And as you can see, once again, here we were entered into the trade on this candle. We were entered. It did not close above the 161, so it was very close to it though, and then it came back right down, traced down to us and knocked us out of the trade over here. We were knocked out of the trade. And I think that was the last trade for April. As let's see, where were we? April, yes, that was the last trade for April, right, which was in a losing trade over here. Let's go and look at the FTSE recovery. Righto, we are on the recovery over here now, and remember the recovery is the channel trading. Once again, I'm going to pause the video and first run the back test and get back to you as soon as the test has been done. While we are waiting for the backtest to finish running, I just want to clarify something here. The margin is all been calculated in monetary value, in dollars. So what you see here, to trade on, this is all on InstaForex. It could differ on your broker. It depends from broker to broker. It will differ. It will not be the same as InstaForex. InstaForex has got a very high margin which they allow you. I think it's 1 to 1,000. It is all in the Forex course, which is on the website, where you can read more about it. Their margin on 0.01 lot is $45. So I've calculated the margin out according to that. And that is all in dollar value. These over here in this gray area, and also up here in these, the green and the orange area over here, all these here are not monetary value. It is a pip that is calculated in pips. So what you see here is not in dollars. it's actually pips. You'll be losing a total of, your total loss would be, of course, that 18.4 pips plus a 43 pips. So you'll be sitting round about somewhere around there. I'm not exactly sure what your pips loss is going to be. Add them together and you'll have your total loss. All these things here are pip values, not dollar value. Of course, if you are trading at $1 a pip, then it will be dollar value. But this here is a pips. When they were calculating out, you must bear in mind that this here is all calculated in pips. This is the pips that you will be winning, gaining, or losing on every trade. And it could vary considerably from the value that you see here to the value on the account. Depending on the pip value, how much you'll be winning, gaining, or losing over here. Only the margin, and I repeat, only the margin is in monetary value, in dollars. And be careful, as I've said to you just now, the margin when trading the FTSE and the XPX is very high, and on some brokers it's even higher than what it is on InstaForex. This is one of the reasons why I have chosen to trade it on InstaForex. Although the daily trade on the XPX, I'm busy trading on DarwinX, and there you can see the monetary value is a lot higher than the margin is a lot higher than what it is by InstaForex. Righto, I'm back, and as you can see, if we look at all the trades over here, in total, from January 2019 up to the end of April, we had a total of 28 trades placed. As you can see, the last run has not completed yet, so we will have to go back to the last winning trade. On the last winning trade, the account was $70 up on the $1,000. Let's go and have a look at it. $70, let's just go and say 70 divided by 1,000 equals us with 7%, divided by the 4 months. So we are still around about just under the 2%. We're running about 1.7, 1.8% per month with this one. It's a little bit low, I agree. I know there are many people out there advertising that you can make 2,000% in a day or in a month or whatever the case might be, but that is not sustainable. This kind of trading that we are doing over here is very sustainable, it's quite safe, and the main thing that I always do concentrate on, and that is to protect my capital. And also doing that, I'm also trying to protect other people's capital too, whoever is hiring these EAs and using them. My main concern is that to protect our capital, and to I also like to have to make 1,000% in a day. Who wouldn't like that? But it's pointless making 1,000% today and the next 3-4 days you're wiping out your account again. It's like I said to you, the only way you can make that kind of profits, and that is by over trading. And when you're over trading, it's not a matter of when you're going to wipe your account. It's not a matter if you're going to wipe your account, it's a matter of when you're going to wipe your account. Now with that said, let's go and have a look. Let's just close this out again, and let's close this one too. Right, and let's go and look at the Ichimoku breakouts. Once again, I'm going to pause the video and I will get back to you as soon as we have finished running the backtest. While the backtest is busy running, the settings I'm using is just what I've worked out for me, which I have found to be working for me. I'm not necessarily saying that it is the optimum settings to use. If you're renting an EA and you require a spreadsheet calculator, you're welcome to email me, where you will get my email when you have rented an EA, and I will email you the spreadsheet I've made, or you can make your own spreadsheet if you wish. And you can play around with all the different settings you can possibly get. You can increase the stop loss, you can decrease the take profit, you can do many things and work out your lots in many different manners. I mean, there's a million ways that you can set a EA up to run with different settings. I have just chosen the settings I've chosen because that's what I've been doing with live trades for quite some time. I'm happy with the results I get. If I can get anything from 3% a month up, even 2.5% more, I'm happy with it. I mean, because I know I've been around for a long time, and I've read many emails, guys sitting in a castle, and I don't know what, everything. All the stories you read and all the wonderful results they're showing, yeah, you know, sometimes I wonder, what am I doing wrong? But at the end of the day, those things just don't last. If I must tell you how many of them I have bought already and tested, they just don't. They either work good in a ranging market, and when the market starts trending, it just wipes the account out, or vice versa. I don't know. I have not yet come across any system that can work in both conditions, in the ranging market and in trending markets. I just haven't seen it yet. That is why I've come up with these systems. I can see where the ranging market falls flat. Yeah, you can see the consecutive losing trades add up. You can have quite easily, I mean, like on the recovery system, you can have up to 10 losing trades in a row. But what I've done is I've just tried to minimize the loss you will have, and that we can recover the losses to ASP. Most of those guys advertising those wonderful results, I wonder if they are ever using their systems on their own accounts. What I'm doing, I'm using on my own account. I will not rent anything out that I'm not using on my own account as well. That is why I monitor it every day, 2-3 times a day. I'm monitoring my positions, looking for trades on the daily system, which I do on a manual system. And yes, I mean, that's the way I go. My results will all be there on my FX book. You can follow it. And yeah, it's true. So yeah, well, guys, welcome to follow. And if you're going to ask any questions, you're welcome. Let's see at the end of the trade here. Righto, we are back once again with the Ichimoku breakout. As you can see, we'd come all the way down. Where are we here? On the 2nd of April was our last winning trade, which brought us up to $562, a $62 profit so far. Then we had the next trade, which started the new run, which is in a minus trade, and we haven't had another win again. So let's just have a look at this here. Right, as we said, cancel it all, and we've got, what's it, 62 divided by the 500 equals us as a 12.4% growth. Let's go and divide it by the 4 months. Righto, so that gives us about a 3% growth per month, which is nice, considering that you're working on a $500 account. 3% growth, well, that's good. Although the bigger the account becomes, the harder it'll become to trade aggressively like this over here. I would of course reduce my risk. I just don't like risking highly on an account. It's just some other time is going to bite you in the arse, that's for sure. Righto, with that said, let's go and we close out over here. We're going to look at the Bollinger Bands now. We'll move on to the Bollinger Bands. Right, and here we are in the Bollinger Bands now. Once again, I'm going to pause the video and we'll get back to you as soon as the results are there. Righto, back with the Bollinger Band results. As you can see, over here was on the 1st of April was the close of the last run. We haven't had a close of a new run since. So we'll have to work on the $82 that we're up over here, from $182 what we're up over here, because we started with a $500 account. So we're up $182. Let's bring our calculator up and let's just go and see. So let's say it's 182 divided by 500. That gives us a 36% growth so far, divided by 4. That gives us a 9% growth average for a month. That is very high. I'm actually quite surprised. But yes, the Bollinger Band, because it's a high frequency trader, you will be getting a much higher return. And also, like I've said before previously, I like it because the lots has been worked out quite safely, and I feel comfortable trading this one on a $500 account, and it's actually running on my one account at this point of time, because the one account I've got, I've actually used for testing things, and it had less than $500 in it before when I put the EA onto it, and it's running up nicely. The account balance is climbing up slowly but nicely. With that said, thank you very much, and for those of you that are renting or going to rent an EA, I say thank you very much, and if I can help you or assist you in any manner, please, you are welcome to contact me. Thank you. Happy trading.